and a little bit dreary outside, but it's going to get super hot. Glad to be here. We got to hang out and meet many of you. So if you're awake, you're even more impressive that you
That's right.
that you stayed up late with us and then woke up early with us. But it is Theo Trade Live. I've got Brandon here with me, and we've got you here with us. So we're excited to talk. I wanted to talk a little bit about return to inflation, getting your energy back, a good thing for an early morning like this. And then we kind of want to compare the Kamala and Trump economies. I did think it's kind of funny, Brandon, that we go with Kamala, her first name, and Trump for his. Why don't we go the Harrison Trump? Why is it default to that? I don't know. But
Well, I mean, if you were to pick, okay, Donald or Trump, which would you go? I'd go Trump, right? What's more interesting, right? It's more interesting to say Trump, right? Then you got Kamala and Harris, which was more interesting to say Kamala. It's like
it's the
Seinfeld ketchup, right? Or no salsa. Remember the whole thing on Seinfeld? It's like
salsa. Yeah.
people like to say salsa, right? I'm like, so yeah, I think that's the way it is. Just about okay, what is more interesting? What rolls off the tongue? Yeah,
Interesting stuff. But here's what I won't take a lot of time on PPI. It's probably been exhausted a little bit, and some
yeah,
of the discussions we had yesterday. So I'm not going to take a lot of time, but I do want to highlight again that much of the reason why PPI wasn't much higher is because crude prices. So these two are going to tie together anyway, because crude prices fell about 6.5% last month, and they
yeah.
already were down over 7% this month, but we recovered to about 4% down. So these moves, when we look at this, yes, we report sans food and energy. We take the PPI number, we pull out food and energy, but it still accounts for about 12% of CPI. And I'm assuming it's roughly about the same percent in PPI, which accounts perfectly for that 0.9% drop. If you take 12% times it by 6.5, there's your 0.9,
Mhm.
and roughly. And the other aspect of it, how much are they pulling out of the energy? Is it just the energy cost, direct cost, or are they really adjusting for all the things energy impacts? They do put a little bit of transportation and warehouse, but reality is they're not adjusting for the fact that people go to work. They're not adjusting for the fact that when we talk about transportation, they're really not adjusting for the adjustment in even grocery goods that cost is added into it. That shipping large containers, yeah, we might put that because it's transportation and warehouse, but we're not really accommodating for how far oil touches as far as reaching out. It spreads, just like if dropping the oil on the counter or an oil slick. It goes and it spreads and spreads. And so it does impact all costs. And so when we see it come down and down and down, plastics cost oil.
Yeah.
That's how we do it. And even though the jets and others, I know we can look at that one later, but even though they do hedge, it still has some impact. And so I think we really need to be aware that this move in July, this move in August, and even this little bit here for the first few days, we've turned negative to positive now on September if we get back to this level. And this is what I'm looking for. We're already
Mhm.
recovered half. I'm looking for it to get up to here. And we could see this go all the way back up. And then how do you justify that we don't have inflation when we return
Yeah. Well,
up
and,
another
and
6.5%?
I'm like you read about this side like how like oh man, there's so many bearish sentiment trade on oil, and yet oil's still in backwardation, right? I
Yeah.
mean, we're still at 5-year lows in oil supplies. We're still kind of chipping in a little oil here and there every week into the SPR, the Strategic Petroleum Reserve. I mean, so we have all this stuff going on that's bullish dynamics, but all we're doing is saying, hey, I think demand's going to fall. Why would demand fall if not the economy was starting to kind of falter, right? And kind of fall into a shallow or maybe a deeper abyss. But the thing is, people are pricing a recession in oil. And recession doesn't mean the oil prices necessarily should go down, but it does mean at some point oil is probably going to recover unless we're quickly starting to see demand fall, which I'm not sure we're going to see that right now.
Yeah, I don't see that either. And so I'm going to jump a little bit ahead to my a couple of the bulls and bears because we're talking about oil,
Uh-huh.
and then we can get into the Trump economies and some of the debate topic items. But it's part of the reason why I like ExxonMobil yesterday was a huge. I mean, this isn't a
Yeah.
hammer. This is
Yeah.
the sledgehammer, and I want to be your sledgehammer. Huge
Oh,
sledgehammer.
well, Peter
I
Gabriel.
That's right. And a little sledgehammer here. And I do think we're going to probably return at least back up to 115, but I think 120 is on target on Exxon Mobil
Yeah.
and CVX. And we'll come back and we'll talk about
And look,
more
I mean, those
stocks
are
here.
dividend producers. They're not expensive stocks. I mean, and they go from soup to nuts, right? They do everything. So I'm like,
Yes.
if you're looking for the catch-all, trying to figure, okay, is it the producer side that's going to rally? Is it that kind of midstream? Is it the downstream? Like, yeah, look, they're just do it all. So those are natural ones to look for, and Exxon has the highest weighting in XLE. So
Yeah, and just for those that are, if you're looking for energy stocks or anything that's specific, right through here, the oil, gas, and consumable fuels, all these guys through here kind of do it all.
yeah,
And so that's, I'm not saying Schlumberger I'd love to be able to buy, but it's not doing that great. But we can come back and look at some of the individual
speaking of
bulls and
consumable
bears.
fuel, I went to Walmart last night trying to figure out how to get my side monitor to work. I got some mini Cokes. I had some consumable fuel this morning, so
You had lots of consumable fuel.
oh, it was a mini Coke. I mean,
Like
I'm
I
not
said,
gonna
getting your energy back. So that's what we're talking about, getting your energy
yeah,
back. All right.
sugar,
And
caffeine.
this is what we run on: sugar, caffeine, and inappropriate thoughts. So as we're looking at the, you know, oil prices, if this recovers, I think we're at a tipping point, and this will tie into the inflation discussion and into the economies. We're at a tipping point here on energy. We're at a tipping point where if we bounce, we could go up 10%, 12%,
Yeah.
20%, 40%.
Mhm.
And if we look at oil going all the way back here, remember the idea, if we start spending again, if we start getting aggressive in our spending, this type of move is possible.
Yeah.
And, I'm not talking going from negative like we had theoretically all the way up, but that's a 100% increase in oil prices in a matter of 6 months.
Well, and go back to 2008 when oil prices surged. It surged in the back of what? Weaker monetary policy, right? Dovish policy, and all of a sudden people are pricing in the dollar going in the toilet, borrowing yuan. So we're basically borrowing in dollars, thinking, hey, we're going to be able to take a stronger yuan and be able to then pay back the dollar loans. And it lasted this massive spike in oil. Again, it may not be Chinese yuan this time, but again, if the Fed starts to pursue easy monetary policy, the economy is not quite at that tipping point yet, and all of a sudden, oil prices could definitely spike. And all we have to do is get that bearish trade to flip. They start covering. Conditions are ripe for a big move in oil. The question is again, maybe the economy falters enough that demand just completely comes to a halt and supplies go up. But again, that's just not happening yet. There's just no indication, and the futures are still in backwardation, meaning that as you go across the contracts, the futures contracts, prices are declining in the future, and
Yeah.
it just shows that hey, if you finance and lease, the lease rate is paying for the finance and storage costs, and Cushing is not very full right now.
Yeah. I was going to say, and I was pulling that number up this morning too. And yeah, we've got a lot of area that we can load up. So this is a key level though, and I think this is kind of that inflection point for a very long time. We can go back to 2020. It was a high, it was low, all the way through there. And from a technical view, 67 is a very strong base. And I'd say 66, 76, 66, 76. And we talked about that in
Yeah.
23. And I do think we're going to bounce through here. But if it does, demand completely falls out, worldwide recession type of situation, yeah, we could totally drop back down into the 40s. But this is the key point, and I think this is the time to be looking at getting long oil. Now that goes against my utility stocks, but it is a time to look to go
Yeah.
long in
Well,
oil.
and I mean, and Kamala accurately pointed out that we have record production right now, which we do, right? I mean, production, we saw production going into 2020 was really high. It dropped off because again, all the calamity, they pulled back the capital investment, and of course we had major losses. So yeah, we do have near record production in the United States of oil right now, but I mean, policy wise, it's been relatively hostile towards production of oil. So it's hard to know where would we have been, right? But right now, regardless of what production levels are, production is relatively low compared to supplies, right? I mean, we're not seeing supplies go up. It's at a 5-year low.
Yeah, and speaking of hostile, the debates the other night,
Yeah, I
you,
know, right?
so Brandon and I, for those of you that don't know, I am not a Republican. I'm not a Democrat. I'm the most hated person in politics because I'm a moderate, and so no one likes me
You
because I
said
don't
nothing.
back
No.
their case. And Brandon is similar, a little more libertarian than I am.
Yeah.
But the point is, and so we don't have a pony in this game. And so a lot of people want to get into the politics and say, oh, this is the right person, this is the right person. And I just don't agree because I don't think either one of have it locked down. So when we talk about this, I want you to understand that we're not picking sides, even though many of you have picked sides already. I'm not here to pick sides, but what we're going to talk about is their policies, which they didn't talk about. Thank you very much. They did not talk about their policies in
Yeah.
the debate. So sadly, they didn't get into it. But I went and read, they talked about the fact that, well, so and so economists and Wharton Business School, they talked about this, and this is what they
Hmm.
think. I went and read it. I went and read
Uh-huh.
some, not all of it. I didn't go all the way through because they're, didn't have a lot of time to get through all of it. But let's talk about the two economies, and we're going to talk one. I'm going to comment about some of the things they said, and then Brandon's got some stuff that we'll talk about as far as the tariffs go. But before we go there, I showed this yesterday. They taking the price comparison between DBC and bonds, which is we treat bonds as the risk-free premium. So if you compare risk-free premium bonds to commodities, you get a real idea of inflation. Now this ratio, if you can see it clearly, this is gold versus bonds. And if this is up, if it's up over its blue line and over its yellow line, this is rising inflation. And if we look at that, that's more of rising inflation as a hedge. And so gold and bonds, you can see, are at a 3-year high. If we go back even further, we are fighting inflation a lot more than people think. This is the 20-year chart. This is scary.
Yeah.
When people say inflation isn't there, we went from a ratio of 3 to 22 since 2005. And
Yeah.
if you want to talk about since 2020, we'd returned to the 2011 highs. And from 2020, with the increased spending, went from 13 to 22, 14 to 22. So that's a 50% increase in inflation as far as gold goes. Now, if we leave in the oil components, which have been selling, and go to DBC, you're going to see it's not nearly as scary because that drop in oil. This is why we say, oh, look, X-Food and energy is not so bad. It's because of oil fell through here.
Yeah.
But we're absolutely on the climb. This is one of my favorite charts to look at because it clears out all the noise and says, you show me, are you hedging or you're not?
Hmm.
And are we seeing inflation? Well, this little pullback in 2022, 2023 is almost all oil. If it weren't for oil, you would be up there, like I just showed, at 20-year highs.
And I
Inflation is
wish
hot.
I wish because you think about because I don't consume oil. I consume gasoline, for example, right? I'm like, and
Mhm.
I understand that oil is an input, but in everything, but I consume gasoline. But from my standpoint, I'm like, oil at $70, and I look at gas prices like 350, in some areas are over four, some areas are over five. I'm like, that doesn't relate. I mean, if I go back, when oil prices were $70, let's say, in 2008, seven. I mean, my goodness, when oil at 140, when gas prices were pushing $4. So the idea is, well, what's the difference in that? Why all of a sudden are gas prices so much higher today at a $70 barrel than they were in the past?
Well, even look at retail gas futures through there. We went all the way up here, and this is when you saw in California, you're paying $6.50, $7 a gallon. And here we
Uh-huh.
are, theoretically, you should be $2 lower.
Yeah.
And we're back to 250, but we spiked all the way to 432, which means add in your your taxes and stuff like that. This is California again, about $7 a gallon,
Yeah.
and higher than what it was at the peak right before the economic crash over here. So this oil pullback through here, retail gas prices have pulled back, but they were way up here. In 2022, we hit 432. We hit
Yeah.
the highest number we've ever seen. And you can see inflation has continued. So all the other things, minus the cost of gas, have kept climbing. So how do they
Yeah. But,
fix
but
it?
when you think about, yeah, well, I mean, but again, you think about the amount of tax that's in a gallon of gas, like, say in California versus other states. You think about the ability to produce gasoline, right? I'm like,
Mhm.
it's diminished in some areas. We've had a lot of refineries go under it in the last few years, right? That have stopped production. We don't produce any new. I'm like, man, I would love to see a governor, let's say our governor, we're in Utah, Cox. Why don't we exercise nullification? I mean, Colorado, stepped in there and legalized marijuana when it was against federal law. Why don't we say, hey, let's build a refinery? Screw federal
Legalize building
policy,
a
right?
refinery.
You know
Interesting
what?
way to go.
Yeah, just nullification. We're gonna nullify federal oversight, federal restrictions. Hey, we'll produce a new refiner. We'll allow them to expand in Utah and say, hey, if you try to enforce it, we're gonna stop you. This is what we do historically, but we don't. But the idea is that when we think about stuff in terms of candidates, regulations, taxation, all this stuff adds to the cost. So we're seeing just the raw cost of inflation, but there are other costs due to policies, the regulatory framework, taxation, again, and so we limit sometimes our capacity to produce. My son right now is in Taiwan. He's saying how cheap food is there. I'm like, he can get a big bean, which is like shaved ice, mangoes, ice cream, sweetened condensed milk, a giant bowl of it for $3 or $4. Here it would be like 15.
Hmm. Yeah. So, so in the Wharton's professors, when they're talking about this, both of them are they talking about a good game, obviously, when they're not on the debate stage. On the debate stage, they're just an embarrassment to humanity. But as we're looking at this and talking about what their policies are, they're going to talk a good game. And the Whartons came down to this idea that they're going to say, look, the Kamala economic plan is going to benefit to some sense the bottom 95%. And the Trump plan won't benefit them as much. And the Trump plan is they reviewed it before he spoke at the business college. And so before he talked about spending cuts. So they did the revision. So that statement was true that, they said that her plan was better. They said, yeah, we absolutely did because we hadn't got his statement. We were going off of his previous stuff. And, so I went back and read what Wharton said. And Wharton's did come back and said, hey, we did this before he had his thing with the business college and talked about these different things that he was going to do. So the key thing that I was saying is that he was saying that he was going to be doing trillions of dollars of spending cuts. And so without those cuts, he was going to add $5 trillion to the deficit, and Kamala was going to add $2.5 to $3 trillion to the deficit. But here's two issues I have, and the questions I'm going to propose to you, Brandon. From that side of things, the increase of the $2.5 trillion to $3 trillion, we'll say $3 trillion versus $5 trillion. And the reason why I'm going to say that is because that's what's going to happen with inflation. We're just going to keep adding $3 trillion and $5 trillion. I don't see another way around it.
Yeah, well, I mean, we're going to see that the interest that we're paying on our debt is over 1 trillion now, and like by the end of this year, it's going to be 1.2. I mean, Social Security, Medicare. I mean, there are structural future deficits that are structurally built in. I mean, yeah, the deficit part of it, but there's this assumption sometimes that okay, hey, we do this and that, we're going to increase revenues to the federal government, and that's going to solve the problem. The structural issue with regards to any candidate, Harris or Trump, is Congress itself and all of the varied interests. And again, can you legitimately cut spending to the point where you can actually get deficits under control? And look, I mean, Trump himself extolled the virtues of central banking and the recovery off of COVID. Yeah, $5 trillion. So I'm not sure we're necessarily going to solve problems, I mean, but I think sometimes as far as the perception, or sometimes in reality, I mean, sometimes your life might be a little bit better due to certain policies from one president over another. But Goldman Sachs, I mean, the CEO Solomon came out because Harris referenced, it's gonna be better on me, but it's like it was an independent guy, and it was 0.2%. And that's GDP. Does GDP benefit anybody?
No.
No, I mean,
GDP
it's not.
is
It's not even real. I mean, what
no.
is it? we had Blake. We had 4.1% GDP, first advanced estimate, in second quarter of 2008. A year later, we're saying no, we're in recession. So when you look at GDP and people talk about GDP, it's not real, right? And government spending accounts for a tremendous amount of it.
Well, once was the government spending met less than 15%. So now here we are at 25% in some
Yeah,
cases. Well, and the other comment I was going to make is that we can claim that the Kamala is going to be better for the middle and lower class. And we can claim that the Trump ones have already shown history and that he's able to execute it. But the problem is that Trump said he's going to cut $1 trillion in spending. Not going to happen. And
yeah,
he's never, he made a very good point. He said you're never going to get you're never going to get that passed when he talked to Kamala on a different topic. We won't go into
yeah,
what there was, but this is what I'm saying to Mr. Trump is that you won't get that cuts. You won't get that
yeah,
passed. And same thing with Kamala. She says it's going to benefit the bottom 95% because we're going to get it from the top 5%. Never going to happen.
yeah. Right. I mean, so all suddenly we're gonna tax wealth. We're gonna tax, and I mean, what are we not going to tax? Again, it's this rhetoric, right? I mean, like, so
Yeah.
again, these are campaign promises to tax everybody, right? Or tax the top one
Tax who
percent or half
tax who you
percent,
aren't.
right?
Whoever I'm talking to, I'm going to
Right.
tax everybody but you.
Yeah. And so the reality is, I'm like, taxation always flows downhill, right? So eventually, whether it's an inflation tax or whether it's an explicit tax where they reach in your pocket and rip it out, again, the tax is going to be there regardless of who is in power, I guess. Because why? Are they going to really be able to change policy dramatically enough? Now we were talking, so Blake and I flew the same flight in. We're in the rental car going to the hotel, and one thing I'm excited about with this regard to this election, and it is kind of what Trump's kind of collecting here in terms of RFK, Tulsi Gabbard, from the Democratic side, is that could there be a viable third party coming out of this? That would be kind of awesome. So we got UK
Yeah.
Ray in the chat. I'm like, it'd be awesome to have more parties vying for control. To maybe we can kind of dissipate the uniparty stranglehold we have in Congress, because there's very little dissent. Right now we have bills in terms of spending bills coming up right now, and Speaker Johnson is going to fold. I don't know, probably, but I think when you go back to this whole GDP thing, it's like, okay, and we think about subsidies. So you really saw the big difference I saw play out on stage at the debate is that Harris is talking about subsidies, right? We're gonna talk to you and see what you need and all this other stuff. Trump saying tariffs. Now,
Those are both in economics. Those are both considered taxes that are passed down.
yes, right. So those are considered the same thing. However, from my standpoint, when I look at, again, being more libertarian minded, do I want the government itself to dictate who gets what, or would I rather see, okay, let's drop, so again, Trump has discussed whether it can get passed or not. Talk about ideas here, but if we were to cut taxes, or maybe even effectively eliminate taxes, and we generate our revenue from tariffs, now all of a sudden we have much more of a level playing field, right? I mean,
Mhm.
we're subsidizing the government. We're not feeling it come out of our pocket. But guess what? Companies like Apple, Nvidia, these massive companies pay very little in federal taxes because they do all these maneuverings outside the United States. But if they want to sell in the United States, if they want to bring their phone over, because they've negotiated great deals in China and they bring that product over, okay, now they're going to pay a tariff on it. Now, I didn't like the fact that Trump's talking about like tariff type wars, right? The idea that,
Mhm.
oh, we're going to really jump it. Dude, just make it, let's say it's 5%, a flat tariff on everything. Now, all of a sudden, these bigger companies are having to pay a tax. And yes, it's not going to flow all the way to consumers. The producer, basically the importer, being Apple, for example, on their phones, they're going to have to absorb maybe all of it if they get squoze on the manufacturer side, and if we can't necessarily afford it, they're going to have to pay all the tax. But the reality is, from my standpoint, if I were to weigh those two, you might say they might produce similar outcomes in terms of GDP, or you may favor
Yep.
government spending in terms of GDP. But I think the real effect on the economy is much better if we had a low flat tariff. Unfortunately, I'm not seeing Trump propose that, which I'd like to see him do.
Yeah, and yeah, I would agree with you. I completely agree. And that one of the things that we mentioned is yesterday last night when we're at the little welcome, as I was talking to the group and said, don't forget when we look at this, a punitive or at least a fighting type of a tariff instead of a blanket one, it caused the tariff wars of the 80s. And the 80s tariff wars, I believe, had some influence into the Asian contagion. And the fights with tariffs, when you go aggressively and uh, I guess targeting a specific
Mhm.
country or a specific group, so what they call that with prejudice, um, then that's not a racial thing. It is what we're targeting something specific.
Right.
It caused it caused problems across the board, and it hurt both sides. It hurt the us levying the taxes, and they raised their taxes, and we are our tariffs back and forth. And what it did is it ended up being on the shoulders of the consumer. And the same thing happened when we did farm subsidies, when we did education subsidies, when we do housing subsidies. What happens is the prices go up. I've explained this a lot of times to,
Yeah.
and it's pulling up the Nikkei, but I can't go back there far enough. I was talking to my kids and said, look, it's really quite simple. When people say, well, just give everybody $1 million. Great. If you suddenly had $1 million
Yeah.
in your pocket, are you going to sell your car for 6,000?
Yeah.
No, because the person's not going to sell you their Lamborghini for 250. Your Lamborghini, since money is cheaper and money you have so much, and everybody wants to buy that Lamborghini for 250,000. If everybody has $1 million extra, they're not going to sell their Lamborghini for
Yeah.
250. So across the board, instantly it'll inflate its way out. And that's
I
the way
think,
it is with subsidies and
yeah.
with tariffs. It gets passed to the consumer.
Well, like, so for example, let's go back to 2008, right? I mean, like, we had this inflation spiral happen, and then we hit the financial crisis, and it went away. But you saw the effect of subsidies, right? You saw, for example, prices for beef, right? Prices for, you know, were going up because why? Feed prices. Feed prices were going up astronomically. And then all of a sudden you find out that, man, there is all this feed rotting on the shores of the Mississippi River because the federal government bought all this feed and they were just letting it rot there, right? They were providing a subsidy.
Mm,
And so again, it's like, so from my standpoint, if we just, again, I want to see everyone have equal opportunity to succeed, right? And I think for a standpoint that subsidies oftentimes set people against each other, right? It classes, you're talking about trade wars. Subsidies, on the other hand, we create class wars or wars between the corporate class and the people. I'm like, yeah, you might try to just chip in the scraps off of Longshank's table, right, to those at the lower end, and maybe they're placated, right? But ultimately, that does not contribute to society long term if you're subsidizing not working, for example, right? That does not lead to more production and a happier society. Again, but doing these trade type wars, that's not where to go. But I mean, but again, if we could get a low level tariff, I would take, and maybe even more of a we're using wielding as kind of a weapon. I would still take that over significant subsidies where the government is kind of picking and choosing who succeeds within its boundaries versus saying, okay, maybe we're going to succeed at the expense of Japan, right? Because
yeah.
they're oriented, they're covered, their their economy towards savings, right, through taxation and other means, or Germany. Germany's exploited a lot of Europe, right, in the southern part of Europe as part of the European Union. And like, French and German, France and Germany exploited that, in terms of other countries in the European Union. So again, I just don't, again, I just, if I were to pick the two, I think in terms of real economic success, I would always take a tariff over a subsidy.
And I would agree with that. And I would go back to the subsidies instead of subsidizing, make it easier to do business. And
Yeah,
all of them want to say, everyone, the candidate says, we're going to help the small business, really, because for 4 years, no one does anything. And then they talk about it on the campaign trail, small business. And afterward, what do they do? Big business. And so,
yeah,
yeah, so all the farmers, let the government pay for your shipping and ship this throughout the world. Ship that corn, send it all over the world, make it easier. So keep producing at full force, get paid your values, and send it over the world. We have the capacity in the United States to feed the entire world. Just here in the United States, we
yeah,
can produce enough food for everybody. Instead, we subsidize it and it rots. Literally, people go starving, and we are wasting billions of pounds of food. And so instead of subsidizing just to produce, or in this case, in some cases, to plow it under,
Yeah. I mean that just kills me, right? I mean the idea is like, hey, we're gonna pay you not to plant. I remember
Yeah.
my just to give you an example, my wife's great grandpa in Idaho, he had a sheep farm, hundreds of head of sheep, and this
He
is
didn't
during
plant sheep.
he didn't plant it. No, he's raising it, he's growing and whatever. But the government came in and they said, hey, you've got to slaughter all of your sheep. You can't eat them. You can't sell the meat. You need to slaughter them. This is the Roosevelt administration, and and of course he was not compensated to the level he needed to, but they put him out of business and they slaughtered his entire flock. And but those are policies of what trying to create inflation because there is this perception, right, that inflation is productive for the economy. And we just need to get away from this notion that printing money, that limiting production and subsidizing labor because we've made it unproductive. 2020, we put up a lot of barriers. We made people less productive, and maybe that was necessary. But the idea is, but now somehow wages are supposed to go up. I mean, how are wages supposed to go up if we're not producing as much? You can't.
Mhm.
And so we want to artificially support it. Now, sometimes we artificially support it through tariffs, but again, I think that the threat of subsidies and subsidies lack of production because of poor policy that regulates and diminishes production, that stuff's harmful, right? And yet we can still
Yep.
say, oh, look at the GDP. Well, GDP is not real, right? That's not what's in your pocket. That's what the government is spending.
Yep. And by the time GDP is negative 2 quarters, you've already been in a recession.
Yeah,
It's just the way
right.
it is. So, all right, we are down to about 5 minutes before we need to get out of the way, or actually, yeah, roughly about that, before we need to get out of the way for dawn. And so, can we go Bears and Bulls really quick?
Yeah,
I've already talked about ExxonMobil. I'm going to throw Fang up there, and we can look at some gold here as well. Fang is a similar one, but I wanted to see this close above, and we talked about this yesterday. It did not. I want you to see that it pulled back and through here. So if we can close above this candle, I don't even need to clear this high yet, but if I can close above this one, I'm going to be looking at going long Fang. I am still in XLU until we see oil prices go up, and if we see us stop making new highs. XLU has been doing great. So I'm going to stick with that for the time being. You had GLD on here. Do you still like it from this move, or did it break
yeah.
out far enough that you want to hold? Is this a good time to get in? What do you think?
Well, yeah. I mean, so it's a breakout. I mean, and here's the thing: is like, I mean, gold is what? Gold is there if the dollar loses value, right? So gold is going to go up in the case of, again, the Fed's about to cut and they're just starting a rate. This is not a bad position for gold, especially our favorite word, Blake, stagflation. So if we have a stagflation outcome, or we're not slipping into full recession, gold should do pretty well on a weaker dollar here. But it just shows if the gold's going up, dollar's going down, that's helping stock prices right now.
Yep. Yeah, it'll keep that lift in there just from an inflationary standpoint. You still like PayPal? I like the bounce you got.
Yeah, I mean, so we talked about, last week, selling into the highs there. But again, I mean,
Mhm.
PayPal is relatively undervalued. And that's not true for all of this. But again, they have a pretty good, the financials are well. And again, this valuation is pretty good. We just had a breakout from multi-year kind of highs. So yeah, that's a
And
pretty
you
nice
you talked
low
about
that's
this
forming right
this
now.
area be a good place to step out, but then
Now,
I
now
thought,
you could look
oh,
to step in. Yeah.
yeah, I think I like it from a step back into that trade. So it stays on the list because it got my annotations
Again,
clear.
I think the valuations there, and again, PayPal, if consumer spending slows,
Hmm.
which it likely is. I mean, you're seeing it. You're seeing the effect at the bottom of the bottom rung of the economy right now with Dollar General and Dollar Tree and these big lots going out of business. I mean, essentially, or bankruptcy. There's real issues right now to the economy. But again, PayPal is a little bit different position. You know?
Yeah, yeah, and I just want to say that we were here. We said it first. We called it weeks ago. We said Ally was at a peak. We
Yeah.
said Capital One Financial was at a peak. Now I didn't expect this gap, but
I
we
mean,
called
look,
it back here. We recalled it back here,
I
and
mean, people are accelerating their spending on cards. They're just not able to pay them, right?
yeah,
Like,
well, that's his highest default in used cars,
yeah.
and highest default in credit cards. So yeah, they may have bought them, and and Capital One Financial may have lent them the money, but Ally, CarMax, uh, Carvana, which we drove by a big building out here that had a
Yeah, yeah,
massive Carvana. I'm not sure if that's where if this is their
probably.
location, but
Corporate clutter headquarters,
yeah,
right next to a State Farm, ironically enough.
yes. So they can insure them on the way out.
That's
Anyway, so I'm
right.
still liking the Capital One Financial and Ally for downward sides. Bearish,
Yeah,
bearish, bearish. Um, I did put Mu and Moderna in there. Obviously, banks in general, they've been bearish on for weeks,
yeah.
and so Bank of America.
I mean, they finally. I mean, J.P. Morgan had that big day this week. I mean, again, they're finally kind of breaking a little bit. I mean, this is significant. I mean, financials. If we're starting to see some real volatility enter here, it's a big volume, big candle. Are we starting to finally acknowledge? I mean, some of the risks of all this credit that's been expanded the
Record
last 4 years.
unrealized losses.
Yeah, I mean,
Record that
so
we just terrible.
this is a tipping point, right? Where all of a sudden liquidity dries up fast.
Yep.
Again, is this why the Fed's cutting rates?
I'm worried about earnings, and I'm seeing a lot of stability here, but Micron broke through a 52-week low. Didn't
Mm,
stay down there, but if we can maintain a close below about 60, or excuse me, 85, I'm looking for this to repeat this whole pattern. So I'm looking for nearly $25 drop. I think
yeah,
Micron could fall way down and possibly get all the way back into the 65
yeah,
if it can clear these lows. So that's it did break out. You can see a couple of these like uh, thing and this one I
yeah,
looked at yesterday before I saw them recover. So they made my list
yeah.
as breakouts and then they recovered a little bit. So
Well, Don's pulling out the hook. Clear the
okay,
way.
hook.
Don's busting through the crowd.
All right. Well, let's jump out here. Thanks everybody. Thanks for watching. Brandon, thank you for always your insight. We appreciate it. We'll see many of you
Yeah, you too,
here
Blake.
face to face here shortly.
That's right. See you, everyone.